guys, it's Ian from Signal Centre. In this afternoon's webinar, I want to discuss two factors of trading, or two trading tools. One is Confluence, the other is correlation. So the subjects that we're going to cover is Confluence, correlations, the meaning behind this. It might be new to some of you, it might not be new to others. Confluence zones or areas, and correlated products. And I've just put something in the end there which says the power of free. Now that's something that I look for personally, and I'm going to try and explain what that is. So confluence, what is the meaning of confluence? It's a situation in which two or more things join or come together. Now in the Cambridge Dictionary, it actually says the place where two rivers flow together and become a larger river. Now that to me basically means that you've got two small factors, and when they come together they get more power, and it's a greater idea, if you like. So the two small rivers join together and become stronger. So if we get these confluence areas or these correlated products, what we're basically looking for is, instead of just a standalone product, so like euro, dollar, or the DAX or gold, what we're looking for is we're looking for a number of factors that should tell us or give us more strength, is what I'm trying to get across, of whether or not we should be buying or selling that product, or if we should be standing aside, really. So correlation is a mutual relationship or connection between two or more things. So again, if we're looking for correlation in currency trading, which is what I mainly concentrate on, then we're looking for correlated pairs. Okay, it doesn't necessarily have to be FX. In the examples that I've given, we are using FX, but you can have correlated products outside of the FX basket. So for instance, if you were looking at perhaps short positions in euro yen, sterling yen, Aussie yen, then they could potentially be correlated to stocks, because we know that investors sell high yielding products and buy yen when the stock markets move to the downside, and inversely euro yen and the yen crosses, etc., have a tendency to go up when the stock markets go up. And also commodities, how can we correlate commodities? Now as well, what we've seen lately is, things like copper. Copper is correlated to the stock market. We get weak growth out of China and weak stock markets out of China, then we'll see copper move to the downside. And also oil and the Canadian dollar, obviously they're very much correlated. If we get strength in oil, we have a tendency to get strength in the Canadian dollar. So what I've done for examples today is I have concentrated on FX, but you can diversify this into different products and look at different correlated pairs. So we're basically going to discuss two different subjects today. The first subject is confluence levels or zones, and the second subject is correlation of strength or weakness in a product. And when I say in a product, like I was saying, it could be sterling dollar, it could be an index, it could be a commodity, etc. So confluence zones or levels, what are we looking for? Well, this could be numerous different factors. I've just highlighted a few here. I put fib levels, trend lines, Ishimoku clouds, exhaustion counts, and previous supports, levels of support or resistance. So what we're trying to do is we're trying to find an area, sometimes it's quite a specific price as well, where certain things line up. Now, I don't know if any of you guys watched the webinar on cipher patterns last week. One of the reasons why I do like cipher patterns, the bat, the butterfly, etc., is because you get confluence areas. You get 78.6% pullback levels that combine with with a 127.2% extension or a 161.8% extension. So that confluence also means combination. So we're not just coming together at the same spot, but combining. And when we get that combination of power, it can make the signal or the analysis that much more stronger. So let's just go and have a look at an example. And this is one that I've taken from this morning. It's not actually what it is starting to work out, actually. We've got Euro Sterling. Now, in the report this morning, we talked about confluence area to the downside. Now, one of the factors is what we've got in front of us on the screen is an AB equals CD corrective formation. So that's quite an easy thing to look for. It's a measuring tool. So all you do is get an arrow or line on your chart. You take the swing high to the swing low. That forms your AB. You then project that over. You can normally drag and drop onto your next swing high, and that gives you a target zone. So we know that we've got an AB equals CD corrective formation target zone at 88, 82. It might not hold. It might just be a pause in price action. It might push all the way through that to a 161.8% extension or further beyond, but it can be one of the factors in what we're looking for in our confluence zone. And then we go to the next reason. So what other reasons have we got that we can combine? Remember, we were talking about combining different factors. So we've got an 88, 82 as a ABCD target level for bears. We've also got a 50% pullback level at 88, 87. So already we've got a 5-point gap, if you like, between the two prices. But considering the move that Euro Sterling has had over the last days and weeks, 5 points is relatively nothing. So we've got 88, 87, 88, 82. And then what else have we got? Well, if we go to the weekly chart, then we can see it's not the best swing low, but it is a weekly chart. I mean, if we broke that down to a 4-hour chart or an hourly chart, that would look like quite a decent swing low. We've got a previous support level at 88.92. So now we've got a combination of 3 different factors that tells us that potentially we could be stalling, reversing at a zone which is 88.92, 88.82. We actually had other factors here, which we're going to show later when we're talking about correlation, not confluence. Okay, so let's have a look at another example. This is euro dollar. We've got a 261.8% extension level up here at 112.93. Now, is that important? Have we got other areas around there that would highlight decent resistance? Elliott wave enthusiasts might look at that as the end of a 5th wave, which should or could highlight the top of a trend and the start of a corrective formation lower. So 112.93 is our first factor for this confluence area. Then we go to a fib pullback. So remember, I was talking before about cipher patterns. This isn't a cipher pattern, but it is a fib confluence area. A lot of traders look at a 78.6% pullback level. So 113.11. So already we're 18 points wide on this zone. Like I said, sometimes they're zones, sometimes they're more precise areas. And then if we go to the daily chart, we got a previous swing high. So it was resistance. It should act as resistance again, even if it's only momentarily. So we've got that area again, that 113.23. If we break it down, 113.93 area. And you've got to remember, these moves that we've been having lately they're quite decent moves. So a 30 pip spread for a target zone or a zone where we believe it's a good opportunity to get short. If we look at an ATR, which is the average true range of the day, that 30 pip zone is relatively small. So that's really an example or two examples of confluence zones. Now I want to talk about correlation. We're going to use the same example to highlight correlation. So say we're looking to buy euro sterling, and again I'm just going back to the call that we had this morning. Can we see a positive bias for the euro to go up? Because obviously if euro sterling is going to go up, we want euro to strengthen. And can we see a negative bias for sterling to go down? So obviously if euro is going to strengthen more than sterling, and that's what we're looking at as well, by the way. So it's more strength in sterling than weakness. More strength in euro and weakness in sterling. Now that doesn't mean that sterling dollar is going to go down. That might sound a bit confusing, but it basically means that euro strength is going to be greater than sterling strength. Doesn't necessarily mean that they are going to move in opposite directions if they're based against the dollar, or if they're based against the Swiss, or if they're based against the yen. What we're looking for is more strength in the euro than we have strength in sterling. You see what I'm saying? So what we're really looking for is euro up and sterling down. So how can we do this? What pairs do we look at? What other products can we look at? And remember, I was saying before, you don't necessarily have to be looking at currency pairs for correlation. If I was looking at dollar CAD in this list, I might have oil, or I might have the dollar basket. I won't necessarily just have loads of crosses for the dollar and the CAD. But we're just looking at euro sterling now. So euro sterling, can I see a bias for euro sterling to go up, euro Swiss to go up, euro yen to go up, euro CAD to go up, or can I see a reason for sterling dollar to go down, sterling Swiss to go down, sterling yen to go down, sterling CAD, and that actually there should say euro dollar. So can I see a reason for euro dollar to go up? So let's have a think about different factors. Again, different reasons why we could believe that euro, or one of those euro crosses could move to the upside. Have we got a fib extension level or retracement level, which is going to either act as resistance or support? Have we got trend line support that we're just hitting at the moment, the same time that euro sterling hits that 88.82 level, or that 88.92 zone? So have we got a trend line support in one of the euro products? Have we got Ishimoku cloud support in one of the euro products, maybe on a daily chart? Have we got previous resistance or support? And again, now we're looking for support. So have we got euro support in one of those different euro crosses? Or have we got exhaustion counts? I'm a big fanatic on DMARC. So what I do look for is 13 counts, and 13 counts normally highlight the end of a trend and the start of a new downward bias. So again, this is just a list that I've put together, but you can add to this list, you can build this up, you can use whatever technical tools that you use and combine them in to give you a bit of power for trading correlated pairs or products. So I've just put here the power of three. Now, I mentioned before when we're talking about confluence areas, what I really look for, I want sort of 3 or even more reasons to have an area or a zone where I want to get long or short of a product, but I want a minimum of 3. So I've just put here, I've highlighted 3, maybe a fib extension, a previous support, and an exhaustion count. If we can get 3 of those out of that product basket, then I'll be quite happy. So here we've just gone to the first one. Remember, we're looking at a euro sterling long. So I want to be long euro, or I want to be more positive in euro, and I want to be negative or more negative in sterling. So here, and this was the hourly chart, I've got a DMark 13 buy count. So that's euro dollar. So it's a euro dollar 13 buy count. So that's already saying to me, and I've got higher highs, higher lows here. If I put a trend line on there, it wouldn't be far off. But I'm just showing this one example here. So that's giving me a bias to buy euro around about the same time that euro sterling has hit that zone that we're looking at. And then what have I got in sterling dollar? Well, this is a 4-hour chart, but I've got an exhaustion count to sell it. So already I've got two factors here. I've got sterling lower and euro higher. So really I only need one more factor to sort of not nail this, because we're using a bias, and the more we can get a bias, the stronger the signal, as far as I'm concerned. Doesn't mean it's always going to work, but the more ideas, or the more areas, the more reasons that we can have for one pair being more positive or negative than the other, then the better. And again, don't look for 10 reasons, because you're not going to get them. 3, 4, 5, potentially, yes. And then the last reason is we've got a previous swing low. And again, this is the daily chart. So this is sterling dollar. So again, it's sort of highlighting that sterling could be suppressed here. We could push sterling lower, and euro, trendline support, etc., we could potentially push euro higher. Okay, I hope that was informative. It was pretty quick, 15, 16, 17 minutes. Please do keep on following our analysis and webinars, and we'll be back again soon with some more, and we have the Telegram group to answer any questions that you may have. Okay, many thanks, guys. Good luck.